Hello and welcome to Money Management. This week we bring you the best of the funds management world with our 23rd annual Fund Manager of the Year Awards. But first, here's your news roundup, brought to you by Securitor. Chris Bowen's proposed reforms to the financial advice industry are still making waves, with research conducted by Radar Results finding 1 in 4 financial advisors may retire early or leave the industry altogether in response to the changes. However, many advisors still don't fully understand the proposed reforms, with many not realising the changes are not retrospective. In financial results, Westpac posted a 32% lift in net profit for the 6 months to March, with Chief Gail Kelly pointing to the strength of BT's investment platform and insurance businesses, as well as the benefits of the St George acquisition. National Australia Bank's net profit for the half year was down 21.4%, despite strong earnings growth in its business banking, MLC and NAB wealth divisions, largely influenced by the Aviva acquisition. NAB Chief Cameron Klein used the half-yearly results to make clear the group still aspires to acquire the Australian and New Zealand arms of AXA Asia Pacific. Klein said the group is pursuing its options in response to the ACCC's veto of the bid. Meanwhile, across the Tasman, AMP is seeking approval from New Zealand's version of the ACCC, the Commerce Commission. The Financial Planning Association revealed its new CEO as former Godfrey Pembroke head Mark Rantel, and Dealer Group Financial Planning Services Australia appointed former AFS head of distribution Danny Marr to the newly created role of General Manager of Advice. Merger and acquisition activity continued, with Challenger Financial Services acquiring Credit Suisse Investments Australia, including 5 credit funds and 2 real estate securities funds. The listed Trinity Group is selling half of its funds management business to property managers Clarence Property Corporation as it seeks to reduce debt levels, and Fortitude Capital and Aurora Funds Management agreed to merge. Count Financial Chief Andrew Gale confirmed the group is reviewing its platform arrangements in light of Chris Bowen's proposed reforms, and the receivers of Forest Enterprises Australia have revealed the group's fundamental reliance on MIS sales was one of the factors that led to its entry into administration. Deloitte said the group had been unable to deliver a sufficient restructure plan in light of the removal of support from one of its key MIS distributors, PIS. And finally, the FPA's quarterly complaints and disciplinary report has highlighted a number of issues around super switching, review service levels, and advisors asking clients to sign incomplete loan or product application forms. In this week's Money Management, Mike Taylor discovers sentiment levels among financial advisors have declined over the past quarter on the back of a soft stock market and a number of proposed government changes. And in partnership with Lonsec, Money Management rewards investment excellence in our 23rd annual Fund Manager of the Year Awards. We spoke with Lonsec's Amanda Gillespie.
Yeah, 2009 was an interesting year. The strength of the rebound of the markets in March took a lot of managers by surprise. And those managers that were active and were able to position their portfolios really benefited from that theme. Emerging markets continued to be a strong theme last year, as did the theme of credit as opposed to sovereign debt within fixed interest markets. On the qualitative side of things, some of the boutique managers, did well, benefiting from the structure where the people managing money have got skin in the game. And a lot of managers who'd managed to hold on to staff through the global financial crisis even added resources last year, and that was a positive in terms of the consistency of their investment process.
For a full rundown on all the winners in our Fund Manager of the Year Awards, see this week's edition of Money Management. Thank you for joining us, and I'll see you again next week.